Hello, everybody. This is True Demon, the Devil Stockbroker, and I'm going to be going over the AMC earnings and the new stock dividend that's been announced. A actual dividend, I'm really happy to say. Um, we're just going to go ahead and get straight into this one. This will be a very short update. So first, let me begin by saying that AMC had an absolutely killer second quarter. They've absolutely obliterated a whole bunch of debt at a major discount. They generated a whole bunch of decreases of their expenditure. They used a record low amount of cash for operations. They have improved their EBITDA, which is the earnings before interest, taxes, depreciation, and amortization. Basically, it's earnings over debt and taxes, which is now finally positive, 106.7 million compared to a loss of 150.8 million for the second quarter of last year. So year over year, there's improvement upon improvement upon improvement. Um, Probably the most interesting and bullish one is the fact that their revenue has almost quadrupled. Perhaps the most bullish one is that their revenue has almost tripled from 444.7 million to 1.166 billion year over year. So overall, this represents a net loss of $121.6 million for AMC compared to its previous year over year quarter to 2021 of 344 million. So this is actually an improvement. I know it's a net loss, technically speaking. This is primarily as a result of AMC paying down debt, which is an excellent improvement overall. The company during the call, which I'm not going to replay for you here, you can feel free to check out Matt Core's channel if you want to go ahead and see a earnings call recording. He streamed that this afternoon, but you can check that out. And the call was extremely bullish. Like the sentiment for the leadership at AMC is absolutely fantastic. So some of the most bullish numbers that we see here is actually not necessarily in the amount of money generated, but really what the difference in their profit margins were for this quarter year over year. So year over year from 2021, they had an additional 168% increase of attendees, which by itself that should tell you that the crowd of moviegoers is back in full force. Everybody is interested in getting out of their homes, and the thesis has basically been proven that people are fed up being stuck inside, and movies remain a long-standing American tradition of date nights, just a way to get out of the house, an experience to go see a movie with your family. But when you stack that up against the income or the profit margins of AMC theaters, we get some extremely positive numbers. So the food and beverage spending per patron was $7.52 versus $5.58 year over year. Excuse me, that was actually comparable to pre-pandemic of 2019. So the actual cost of concession sales or the revenue from concession sales was up almost $2 full per patron. So for all of those new attendees that are now going to see the movie, they're spending more on popcorn, drinks, candy, which if you're not familiar with the movie industry is really that's where theaters make all of their revenues from concession sales because they only make a small profit on the actual ticket sales themselves. So this reflects a pre-pandemic increase of 34.8% in food and beverage profit margins, and globally their other revenues per patron were $2.01 versus $1.22 in second quarter of 2019. So that's up a full 64.8%, which I noted that the CFO, Sean, was actually the most bullish about that specific number because it represents a total revenue of patrons spending their money on additional activities at the theater not related to food and beverage. So this is special events or renting theaters and other such activities. There was mention of the $28 million Highcroft Mining investment into the gold mine, which is still they're still looking optimistically. So Adam Aaron specifically stated that, quote, in our unique circumstance, while our loss per share benefits from improved operating results, it is also impacted by our quarterly marketing to market of the volatile share price of Highcroft Mining Company. Because of stock price swings in the second quarter of 2022, we wrote down much of the large gains that were booked in the first quarter, while our reported losses continue to be impacted by market price volatility. We continue to believe strongly in the potential value of our $28 million Highcroft Mining investment, and in fact, Highcroft just announced it would commence its quote largest drilling exploration program in nearly a decade, and we have every confidence that over time our investment in Highcroft will pan out to be golden. Adam Aaron goes ahead and lists a long list of movies with some very big name actors that are going to be coming out in this year and going forward into 2023, which half of them look really good. I'm not normally a moviegoer myself, but a lot of these I'd be actually really interested to go and see. And the company has overall great reasons to be bullish right now. In terms of the numbers in the 6 months ended of June of 2022 over 2021, you see overall there's massive improvements. A 452.2% improvement in net loss, a 175% improvement in cash used, 1.18% improvement in loss for diluted loss per share. All all excellent symptoms of a company that is improving its financial standing. So, in addition to that, AMC also improved its standing of liquidity, which is placing its cash as of June 30th, 2022, at about 965.2 million, excluding restricted cash of 22.7 million. And AMC currently has a liquidity available of more than $1.17 billion, including cash and undrawn revolver lines. So it does not anticipate any need to borrow using those revolver lines. Loans of think of an equity line of credit, which is available to you, but only when needed. So that is accessible to AMC in the immediate, but is likely not going to be used. So in terms of their immediate cash, they're sitting at around $965.2 million, which is an excellent place to be sitting where AMC is currently at. And with them having that additional access to funds, if it was required, puts them in a good place to continue operations well on into the next 3 years. So, one of the most bullish pieces of news out of this earnings was the announcement of the AMC Preferred Equity Unit Dividend, which is going to be trading under the ticker symbol APE. That's right, APE. So, the announcement of this special dividend of preferred equity units is going to represent a 1-for-1 share dividend. And unlike the split dividend that was issued by GameStop, this is an actual dividend in which new equity is being issued as opposed to a split, which is going to cause division of the market cap of the company. This is new equity which is being issued out to shareholders, and it will be traded independently of common stock, meaning that it gets its own share price. This is not a dilutive event. It doesn't actually dilute the common stock in any way. However, those shares will be required to be returned back to shareholders who are owed them. That is including anyone who was lending shares as a part of an equity lending program through their broker. So this does have some potential if the trading of this particular equity rises rapidly, that cash in lieu of shares may need to be paid out to lenders. And if, for whatever reason, the value of APE goes up between its issuance at 1 cent, goes up dramatically, then that could result in a net loss for shorts if they are unable to trade the equity in an expeditious manner. Moreover, what I find interesting is that this new equity is going to result in a share count. So, whenever a dividend like this takes place, a share count is mandatory. The exchanges will be reviewing the total number of issued and outstanding common stock, which is trading on the New York Stock Exchange and in the equity markets. And there will be a single share for every current common stock of AMC shares held. So, not only is this going to result in basically free equity being handed out to participants in the market who are holding AMC shares, this is also an incentive for non-shareholders to go into a long position and purchase stock in AMC. Reason being because this is free equity. The company is going to be issuing out this equity out of its own pocket through its own expense and issuing it to shareholders. So anybody who's currently holding AMC through from August 19th through till August 22nd, and you must buy before the 19th and hold through the 22nd ex dividend date at which point you will be owed and delivered new preferred equity shares. So, in my opinion, and this is just my opinion, but that's essentially free equity. The unlike a stock split actually causes the shares to split and decreases the price of the equity, and it results in a net neutral change in the market cap of the company. So, because market capitalization doesn't change during a split, there's essentially no change of value. The decrease in share price and the increase of the float is purely psychological, and the sentiment response can be very different depending on the company. But typically, any kind of split is seen as bullish. But equally so, any kind of share dividend like this one is also seen very bullish because the company is issuing a new stock to its existing shareholders as a way of rewarding them for their dedication, for their investment into the company. And even though the new stock will be issued at an estimated single penny per share, that doesn't have to stay that way. And since this is going to be issued on the New York Stock Exchange, I expect that there will be a form of an IPO in which the equities will be delivered out to retail investors. The best part is that if retail does truly own the float as we've anticipated, then retail shareholders set the price of what they're willing to part with those shares for. And if they're the fewer that are willing to part for anything less than a fortune, the more likely it is that the price of that stock will sit at whatever apes are willing to sell them for. Now, this is entirely theoretical, and there's no guarantee that we are truly in that type of position where shareholders can dictate the total, whatever the selling price or the market price is of APE shares. But that's the situation, assuming that retail did, in fact, quote, own the float, that we would be able to dictate the price. So there's a couple of things that I want to address in regards to this particular event because there's a lot of FUD that's going out circulating around this, and I want to clarify that so everybody is fully aware of what this means. So the first thing that I've seen in my Twitter feeds and elsewhere on social media is that this is dilution. No, this is not dilution. AMC is paying one par value of a penny per share of this particular common stock, or rather preferred equity stock in AMC, and they are issuing it out to existing shareholders. This is not the same as dilution because dilution is just the company issuing new authorized shares of their existing common stock. This is a stock which is going to be independently traded and will have its own market price. What's more is the company is paying out of its own pocket in order to issue these shares. So they're actually paying 1 penny par value per share that's being issued. So in actuality, the value that AMC is paying is somewhere in the neighborhood of about $5 million in order to issue this dividend. And the reason for this is because if you look, there's currently an estimated, before the share count, 516.820,595 shares issued. So 516,820,595 shares are going to be issued by AMC, which they pay 1 penny for in order to list them onto the stock exchange. And that is going to be handed directly to existing shareholders. Those are all the shares that exist, and then shareholders dictate what they're willing to sell for. And that's the free market. That's the way the market works. So hilariously, like, this is just theory, but if we did actually have a situation where the stock was 100% retail participant owned, and every single retail shareholder decided, hey, I'm only willing to sell my shares for $10,000, and that's the only price that I will accept, and they place a limit order on the exchange for $10,000 for their shares, that's what the price would actually be at, according to the NBBO. Is that likely to happen? No, probably not. It's very unlikely that that would actually take place. But that's free market right there. Because this equity would be 100% owned by a single group, then that group would dictate what they're willing to sell those shares for. You can sell it for whatever you want, but if collectively retail shareholders decided that I'm not willing to sell it for anything less than $10,000, then and they were the only ones that were willing to sell, then that's what the price would be, assuming that somebody looked at that price and said, "All right, yeah, I'll buy that." So that's the possible scenario, I guess. Very, very unlikely, but that's essentially, at least to my understanding, how these types of equity issuances work. Another thing that I hear people comparing this to is the BBIG Tide spinoff, which it's not really the same thing because BBIG and Tide, that spinoff dividend was for an entirely new company, which was diverting itself or diverging from Vinco Ventures and became its own traded entity. It's not really the same thing, but in principle, it is. The thing is that it doesn't IPO. It's a stock that's not being released on an initial public offering. It's entirely being issued through a stock dividend. So whoever existing shareholders are the ones who are going to receive those shares. And it's up to them to dictate the price that they're willing to sell those shares for into the open market. Now, where things can get hairy is that we have a bunch of brokers who are less than scrupulous. um, they can do things like do share lending behind our backs, and it's not like that's legal, but it is a fact that they do it, and they've been proven to be doing it, as you can note from looking at like the Bank of America situation right now, where they made buku cash over illegal share lending, as well as Morgan Stanley. And further to that point, since this is going to be issued out directly to shareholders, I feel like it's important to reinforce that those who believe in rehypothecation of shares for short selling, it is in your interest to contact your broker in order to ensure that you are not lending out shares and you communicate your desire to turn off your or to opt out of share lending programs. This is something that I've talked about quite a bit on my channel, but it's probably not being actually exercised by most people because let's be honest with ourselves. We're usually like really busy and we don't want to. It's we'll procrastinate on these things, but it is actually quite important that shareholders, if you believe that your shares are being borrowed against your stock that you are bullish on, it is not in your interest to lend shares because the only people who are really making money off of lending your shares is the broker. They're the only ones who are benefiting from that relationship. Yes, you might get paid out a small fee, but it's micro pennies on top of the dollars that the broker is making from repeatedly lending out your shares. And if you subscribe to the theory of rehypothecation, which has been proven to occur in the markets many, many times, then you could find that one single share of any given equity might be borrowed and resold into the market multiple times. It could be 3, 5, 10 times that a share can be rehypothecated out into the market as a result of these share lending programs. So it is against retail's interest to continue to participate in lending programs. So if you are unfamiliar with that, it would behoove you to contact your broker and ensure that you opt out directly, or you figure out how to opt out of that program through your broker's website or whatever their process is. Don't ask me what their process is. I only have one broker. You'll have to go and contact yours to figure out how to opt out of their share lending program. So, last thing to take note of before I go ahead and sign off for the evening, make sure that you understand that AMC's special dividend is going to be that share count is going to close on August 15th as at close of business. That is the record date of the number of shares that will be counted for the equity dividend. The special dividend is going to issue out those common stocks to shareholders directly. Those shares will be paid at the close of business on August 19th, 2022. That is on a Friday. On the first trading day following, that is on Monday, August 22nd, then those shares will be issued that Monday by close of business. You must hold your shares from August 19th through the 22nd in order to be issued those shares as part of the dividend. If you sell between August 19th and August 22nd, you will lose your right to receive that dividend. And while I cannot guarantee what the price of ticker APE is going to trade at once it opens up in the market on Monday, on August the 22nd, what I can tell you is that it shouldn't be worth a penny. And you are receiving it for free. So, whatever the price it is trading at, just remind yourself that this is a dividend from the company. Adam Aaron is doing this because it is a way to reward shareholders for their loyalty and their passion for the company. I don't see any way that this can be bearish. I'll just be very frank. I don't see how this can be bearish. This is the one thing that apes have been asking for the last year and a half was a dividend. We have been screaming at Adam Aaron for this for literally over a year. Now you finally have it. What's more, it's coming in the form of new shares that you're getting for free. So try to just ignore all the naysayers and all of the bears that are convincing you that this is going to cause dilution or that it's going to evaporate the value of AMC. Adam Aaron is literally spending the company's cash in order to issue you a dividend, okay? Instead of giving you a dividend in cash, he's giving it to you in AMC shares. What more could you want? So, just recapping what we've talked about, overall, AMC's earnings were quite bullish. They were well within expectations. There was a slight surprise in revenue, and they have lowered their operating costs. I believe that they had a like a single penny surprise in terms of their EPS, which is still negative for the time being. However, the movement and the momentum of AMC's revenue and earnings overall is very good, and they are starting to regain their footing as a company in a post-pandemic United States. You can read through their balance sheet currently up on the screen that shows their unaudited revenue versus operating costs and expenses, and a breakdown of their attendance, their screenings, ticketing price, and food and beverage sales per person. The stock dividend that is going to be issued starting on August 19th and held through the 22nd. You will finally see your shares settled into your account, hopefully by Monday, August 22nd, at which time the ticker symbol APE of AMC's preferred equity will be issued and tradable on the market first thing Monday morning on August the 22nd. Not dilution, not a ploy, not a scheme, but simply a reward to loyal shareholders of AMC. And what's more, if you're looking for more of that, you still have plenty of time to buy new shares between now and August 19th to get a little bit more. So I've thoroughly enjoyed this earnings call. I'm really, really looking forward to the future of AMC. I am very pleasantly surprised to see that Adam Aaron came through on his promise, and I look forward to seeing what the company does going on into the rest of the year. That's going to be it for this video. Thank you guys so much for watching. If you enjoyed this content and this recap, please leave a like, consider subscribing, and if you're looking for more education on market and financial conditions, please consider joining Hell's Trading Floor at discord.gg/Hell's Trading Floor. Thank you so much for watching, and have a hell of a time in the markets.